You know, the railroad industry and CSX in particular touches just about every segment of the North American economy. And in conversations with our customers on a daily basis, we're still seeing that they're optimistic about the future for their businesses. Obviously, there's a lot of confusion, noise on a political level and elsewhere that cause people some concerns. But overall, we're still expecting this year to be relatively good.
Wanted to ask specifically, Jim, about the impact of the trade fight between the U.S. and other countries, because I know you've seen the good and the bad of the tariffs. The good, for instance, in the steel industry. Talk about whether that's going to continue and some of the other effects that you're seeing as a result of all the tariffs.
Right. The two areas where we saw the issues that came at us over the last year from tariffs, one has been the steel, and the net impact of that has been a slight positive for us, as there's been new capacity brought on at facilities that the railroad serves. And then the negative being, I think all of the railroads experienced export soybeans being down. But overall, net, it's had a slight positive for us. And there hasn't been any real change in the near term.
Jim, let's talk about some of those agricultural products and soybeans in particular. Clearly, that's a big talking point in the trade discussions. If the deal does get done, do you see trade levels and therefore your volumes just going back to where they were before, or do you see a meaningful step change much higher from the benefits of a deal being done?
Our soybean exports are relatively small in relationship to some of the other railroads, so we would expect our volumes to go back to about where they were before. In the meantime, the markets seem to find new places to go, and the trade lanes change. But if everything gets settled out, we'll probably be right back about where we were.
Wanted to ask about, since we're diving into the various units, autos. You've got a sizable chunk of automobile business. What do you see for demand this year?
Automobile business clearly is a big segment for us. And again, there's an area where we're seeing some concerns in the marketplace as North American vehicle production numbers have drifted down slightly. Demand being down slightly in that commodity group, a titch more than what we had originally expected going into the year, but something that we need to keep our eye on.
What's the outlook for coal, Jim? Is it still a case of domestic struggling, export doing well?
Exactly. Nothing's changed there. The domestic utility coal will continue to be under pressure, although there's some stabilization this year and probably next as fewer utilities transition over to natural gas. But that's a secular changeover that's going to be with us for some time. On the other hand, export coal, both steam and met, continues to be strong, and the outlook there for American exports continues to be very robust.
So many companies that we cover throughout the last few earnings seasons, Jim, have cited this rising freight costs and trucker shortage impacting the business. I guess that's a big beneficiary for you as a competitor to the truckers. Do you see that continuing to help? Is that dynamic going to stay in place over the next year or so?
Well, the trucking industry just, for many years has had a lot of issues associated with driver shortages, insurance issues, then the ELD issues. So all of those things bode well for the railroad industry, but more importantly, the railroad industry and CSX in particular has made great strides in transforming itself into a new transportation option for our customers. Not only have we become significantly more efficient than we used to be, but our service levels have dramatically improved, and our reliability levels are becoming more truck-like all the time, which allows us to be more competitive and a better transportation alternative for many shippers across the country.
So Jim, do you think the market share that you and some of your fellow railroad operators have taken from trucking in the last 12 to 18 months. Does that stick with you regardless, even if trucking capacity increases again?
I would think that that would stick with us as long as we continue to focus not only individually but collectively as an industry across the country in providing the customers with a better transportation product. Everyone knows that rail is cheaper than truck, and the reason that the product is moving on truck today is because our service levels are not where they need to be. As we improve our service levels, we will become more competitive with the trucks, and we should not only retain that business that we have, but get more.
So I don't know what exactly is moving the stock today. I know you presented, but the stock is a little bit lower. Stifel put out a pretty bearish note. It was a downgrade to hold. They called 2019 less exciting for CSX, said it has the lowest revenue growth potential among the railroads in the next few years, and that the margin improvement has pretty much been baked in. I'll give you a chance to respond and counter that argument.
Wow, based upon what we did in 2018, taking this company and transforming it from last place in the industry to first place in just about every service metric and every financial performance metric, that'd be pretty hard to beat that performance in 19. So I think it's just a question of expectations. We're very confident that we're going to have another good year as we continue to focus on running the railroad more efficiently, more effectively, and providing a better service product to our customers. And as we just talked about, there are some issues out there associated with various segments of our business that are going to cause us to have a slightly below maybe what people thought we should have in terms of volumes. But in terms of where we thought we would be at the beginning of the year, low single-digit top-line growth, nothing's really changed for us in the last 6, 8 weeks.